But really, all the battles were fought really right here, right on that midterm. We're looking at 65-minute chart here. And then triple bottom we talked about. Also for the fact that the oscillator hit the extreme oversold right on the gap area 585, 583, 585. Coinciding with the midterm. Not to mention, you guys remember my 50% retracement. You guys, if you don't remember, basically the Fibonacci is understanding the next retracement zone. Basically, market, it is not going to go straight up, right? It's going to have higher lows and higher highs if you understand the longer term. And so what the Fibonacci retracement is going to help us to kind of gauge what's going to be the next level of a potential higher low. So measuring from here, that all-time high, the previous all-time high peak, to the previous, the low, right? That was the low, right? And then that was a 50. So we talked about the fact that 580, 585 level being that important pivotal level, not only because we have a 50% retracement in that vicinity, but we also have the midterm, the dotted blue, and the gap area. Why is the gap area so important? Because the buyers must protect, and this is what we talked about. As long as the buyers can protect this gap, bulls will find a way. There will be shenanigans and fluctuations. Bulls will find a way. And this is a reason why, especially gap this size, it is so important that we understand and then we follow and track these gaps, especially size this size. And this was like, what, 2% gap up or something like that? It's a big, big size, right? But really, though, there's a gap. We got the extreme oversold on that oscillator, midterm, the gap, and the 50% fluctuations, of course, triple bottom that we talked about. And then we finally looks like it's breaking above I gotta turn off my crayon when I want to do zoom function. That's where it always goes there when I have my pen is active. And as you can see, we're looking at the short term here and the micro term. Remember, we gapped up here, which we were anticipating, and then it flushed down. And then on that flush, there was so much commotion. There was so much anticipation and speculation, so much fear also. A lot of people thought that was it. I mean, I had so much comments and stuff on my social media feeds, and very, very quickly, all those bears were back to their caves when we started getting back up here, and it's been making new all-time highs ever since. But this shenanigans, of course, was there just to get some fake bulls out. But really, all the battles were really fought once this gap was protected and the midterm was holding. Really, I think that momentum was already building here, as you can see, and the market, and we're back to, and of course we talked about the fact that, of course, when we go to the, looking at the daily chart and the weekly chart, we always want to lean, right? We always want to lean to the overall trajectory. In the micro short term, it's going to have its fluctuation, shenanigans, and all that good stuff every day. It doesn't matter if the market is at 580. It doesn't matter if market is 600. It doesn't matter if market is 500 or 200. It doesn't matter where. There are going to be fluctuations and shenanigans. It's given. It's given. You're just going to have to live with it. It's the overall trajectory that's going to really help us to gauge what is a likely scenario. What is a likely scenario, right? And that's sort of, just looking back in the last half month. There's really this entire month. Looking back, that sort of was the story there, right? And you guys remember the scare tactic with this island down gap, right? You see there was island up gap, and then it came down. Well, this was island up gap, and then turned into an island down gap. You guys remember that? So that was another sort of market just turning, just, you know, bullying people out, putting all that scare tactic. That's why, again, you know, it's important we understand the 65-minute chart so we can understand the short-term, micro-term. But really, it's gonna be the long term is sort of gonna determine, because after the dust settles, you notice in a bull market that it's going to, bulls will, especially if the key level, which was 585, the key level holds, bulls will find a way. Bulls will find a way, and they surely did. They surely did, and you can see the micro short term just being just riding the micro short term, and these Ponzi leeches are going to continue to ride that until something breaks. And we don't know when something's gonna break. You know how the market is. It could go on for 4 or 5 months straight, like we've seen earlier this year, or we could see a month of move or a couple. Nobody knows. Nobody knows. But here, looks like we're just right on this. You got a couple pivots here I've drawn on this 65-minute chart here, so you can see that's the prior resistance. Retagging that, maybe a little bull flag. We'll see. And then there's that uptrend support. We held that. It coinciding with the micro and short term. That's micro term. That's short term moving average. Oscillator's been oscillating at the top of his band. And this sort of stuff happens, as you know, that oscillator will sort of, be elevated, right? It could stay at the top of his band. Who knows how long? And so you can see it's sort of doing that, right? It could do that. It could sort of stay at the top, right? It could sort of, and then like there's that grind can continue, right? That grind can continue while the oscillator moves sideways. That's so, and you see, you get to the extreme oversold not that often. Even on this 65-minute, that was September low, extreme oversold. That was a November low. And then there was another, the recent low right here. And you can see, looking at last several months, there were 3 times we hit that. And any other time, every other time, oscillator was sort of oscillating at the top of his band. And that's when then the buying pressure is strong. When the trend continues, that sort of event can happen. And looks like possibly the oscillator wants to break out here. It will be more bullish if he breaks out. If he falls back down, that could be bearish. We do have, that could potentially be bearish divergence. But again, unless we see a very, very abrupt sell-off, if we hold around this vicinity here, I think it's gonna break out to the upside. One thing I notice a lot with the new traders, especially, even if you're not new, if you've been in this market for a while, but you've just been so long that you got this bad habit of like very quickly getting into this certain trying to predict. Like if I show you this right here, right, and just quickly predict, oh my god, that's looks bearish to me, that's the wrong way to look at it. I guess if you're short here, and I don't know why you would, you're just basically guessing. You know that, right? You're shorting here, we're just guessing because trend is up. Of course, market can gap down. Of course, anything could go, but can you really trade off of anything? You're just throwing darts, right? You're just flipping coins. A lot of times, though, I think shorting, just downright shorting the rising market is not even 50-50. I really think it's like 20 to 80. It's 20 to 80. So you got like 80%, maybe 90 of chance of losing just throwing darts. But I do want to give benefit of the doubt to the buyers, of course. And let's go to the daily chart. And this daily chart, that oscillator has been on point this entire year. It's not always like this, just so you guys know that it's not gonna be so clean like this every year. This is one of the years that I've noticed that my oscillator's just been very much on point. And this tends to happen much better, I think. I remember this oscillator was fully modified to accommodate the way I trade, which is I love to buy these dips, these bigger dips. I don't buy these like couple day dips, right? Because I'm a position trader. So this oscillator has been fully modified to accommodate that. And so it really strengthens its usage or its effect or its feature when we're in a strong bull market like we've been in 2024. And it makes my job a lot easier because then I'll be buying these dips. I'll be buying call options, triple shares, maybe even some stocks that are extremely undervalued. And these are the levels that I would really look for that opportunity, not so much day-to-day fluctuation. So I really look at the daily chart first. That will be my main, daily chart will be my main screen to look at. I'll go to 65 minutes just to kind of pinpoint, you know, let's say I'm like somewhere here and I want to buy the dip. I'll go to, and then once I figure out sort of zone where I want to buy, I'll go to 65 minutes to kind of pinpoint that. Also, you see, after reset, you see these another smaller resets. I think I think that's what's going on right now. The smaller reset, right? The smaller reset, right? Smaller reset, right? Smaller reset. So expecting sort of a little bit, and y'all have already been running, of course. And so we might be a little bit of sideways and chop since we've been already kind of going up here. But if I zoom into that oscillator, as I zoom in here, as you can see, you got it's not overbought yet. All right, we still got room to move here. And this is daily oscillator, so it's going to move much slower than the 65-minute chart oscillator. And also we have the overhead supply coming up here. That's going to be the rising resistance. I think we should pay attention to it. We should pay attention to it because, not because I drew it, it's because the market has been respecting it. You know, you see, I mean, here came down, here came down, here came down. And again, we could come down, we could break out. We don't know. So we don't want to kind of extrapolate based on the resistance itself. It's just we want to be aware of it. This is a vicinity. And so then you might ask, what's the usage of it then? Well, so the usage of the oscillator hitting overbought and then certain resistance will be this. Let's say I bought this dip, or let's say I bought this dip, right? Let's say I bought calls or triple share, whatever, I bought it. What I would do, I would ride it, you know, let's say, and then this thing gets to near the overbought. No, I don't know. I don't know if this is going to break out or pull back. So instead of trying to call the top here, which I don't, what I would do is I would be maybe closing out half of my holdings or something like that. Or it might not be I might be holding something from here, because again, some of my holdings I hold several months a lot of times. So let's say I bought something here, let's say like calls, spider call, QQQ calls, Russell calls, whatever. And then I see that it's just been like hitting its head on it, you know, then what I will do is, okay, well, you know what? It's here, we're getting overbought. I want to get out half with gains, and then I'll hold another half. So then I go through this pullback for, from the remaining half. And then what I'm going to do is the remaining half. Panic sell here? No way. I'm not going to be panic. I panic sold nothing on this downturn because I want to see if the level holds. We held, so I'm holding everything. And then as it goes back up here, and then oscillator get into the overbought. Okay, well, whatever I was holding half, maybe this might be time to close out all of it, or maybe I close another half from whatever the remaining. Because what if this time's different and break out? So you see, it's never about completely closing it out or calling the top. it's more to do with managing your positions and your portfolio accordingly at these levels that we think that this could potentially be that resistance. But we always want to sort of lean though in the overall trend and always understand the possibility. So you see that oscillator just crossed up here. So the momentum is we made new all-time highs. Making new all-time highs been good for the market, and so we're going to continue to give benefit of the doubt, especially that oscillator is not at overbought yet, and we just crossed up, and just crossing up at least led to another. It looks like another week next week, at least earlier part of next week, that we could potentially see continuation to the upside. So overall, if you look at this chart here, we want to continue to give benefit of the doubt to the buyers. A lot of times looking at the micro term and the short term is going to really help you to sort of let it guide you through the riding this trend. All right, let's go to weekly here. So quickly, I talked about 640 being that level that I could potentially see spider going. I think I was talking about this since early part of this year, right? Maybe somewhere 500 or so. I was trying to figure out for 2024 where we could potentially. I'm not saying we're gonna get to 640 by end of December, though it's a possibility. But it doesn't matter when we're gonna get there. And so many people, from what I noticed is especially on social media, is that so many people are so focused on like time frame. Like they're like, well, how fast will we get there? Or when? That's a wrong question, because how does anybody know? I mean, we can guess, of course. Nobody knows. It's just that's just the craziest part. Is it's very, very hard to know when. Though it's very much a possibility. Can we get to 640 by end of December? It's a possibility, of course, but no one knows. So I don't try to do that. What I try to do though is sort of like overall trajectory, looking at the primary term trend, right, and looking at my secular charts and indicators and oscillators and all that stuff. I came to, again, I'm looking at, you see my fib analysis that I've done here. So this is sort of a 60-40 I was looking at earlier this year, even late last year. And we're 600, so we got like 40 more points to go on spider. I think that might be the level that, we don't know. When we get there, we'll have to do a whole another, analysis and see, is that going to be the top? And we're going to see another 20-25% corrections. We'll have to figure that out once we get there. But for now, I do want to give benefit of the doubt. That's going to be, I think, 640 is going to be, I think, the target for spider before I'm going to start thinking about, be very, very defensive on this market. But what have we been talking about though, looking at these spider weekly bars here? We've been talking, especially last weekend, we talked about that this started looking more like what? Bull flag, not bear star clock cover. You guys remember? We talked about that this doesn't qualify for dark clock cover. Just to quick review, it has to pierce below the 50%, not the wick, but the body of the green candle. So it qualified a little bit more as the bull flagging pattern. And I talked about that, I think, 2 weeks ago. And then that following week, we saw a little bit of green candle right here. And then today, it looks like we are seeing that follow through. And that's what I'm saying. Like these subtle clues that you see, like, well, man, just because it didn't come down just few more points, it didn't qualify as a reversal, like a bear star clock cover, but rather became a bull flag. Yes. The reason is you might look at that as, well, that's just few points, and that few points could have changed trajectory of the market. What you don't understand is it's not just few points, because remember when we talked about the 65-minute chart, it was this gap was extremely important. Yes, that gap was extremely important. This is the gap that needed to held for the buyers, for them to do what they've been doing last couple of weeks. So let's say we would have bears would have came down, filled it. What do you think it would have looked on the weekly? Well, on the weekly, what we would have looked, this bearish candle would have looked something like this. That would be bearish dark cloud cover. Then maybe think, and I'm not gonna say if we see a bearish dark cloud cover, we're gonna see 25% correction. No, we're gonna see maybe a correction for, you know, several weeks maybe. Maybe we have to then, I will be start thinking about telling you guys, okay, watch the micro term, because the micro term acted support back in April. If the micro term loses, the short term is there. So, you know, 567 or so would have been the next level of support. I would have talked something like that. But remember, there was that island up there, the gap held. And then so it turned into what? More like a flagging pattern. And then today we broke out this week. And now this finalized. This candle is finalized, right? And so, well, just looking at previous sort of breakouts, we can sort of assume then, right? We want to sort of assume anything can happen, of course. Looking at the overall trajectory, the overall wind, where the wind is blowing to the upside. So we always want to lean. We always want to lean to the upside instead of like all these bears are start calling the tops. Especially a lot of Elliott wave guys out there. They love to do that. I don't do that. At least not at this level. Maybe if I get to 640, I might have to figure something out. Thinking there might be, you know, we might see a steeper pullback. But we always want to lean and give benefit of the doubt to the buyers. And whatever happens Monday and Tuesday, Wednesday next week, man, we'll figure it out. If you've been thinking about joining my club here at the Traders Club, I do have the Black Friday promo going on right now here. The video that you've just watched, that was a video actually that I released on YouTube. It is actually for my mini members. Currently, the mini membership is having a Black Friday promo here. It's usually $1,000 a year. Currently $790 for mini membership. This is gonna be spider focused guidance. You're gonna have that live stream room access, so you can able to kind of observe my oscillator in real time during the market hours, throughout the day, every single day actually. And you know, not only the daily chart you're looking on your screen here, but also 65-minute chart, and able to you know, scrutinize them and see you know, if we're dealing with markets overbought, oversold signals. And also on top of that, there will be midday and the end of the day updates on Spider. There's a weekly video. Again, that's the video that you just watched. And special updates, you know, something like I'll talk about certain stocks, different indices, Russell 2000. I talked about recently the Russell 2000, the long-term implication of that and what we can expect in December next year. And I'll talk about different sectors. You know, if something that comes up, there's certain signals that I want to share with my members. That's what the special update. But on a day-to-day basis, mini members will focus on Spider, trend reversal, signal overbought, oversold, long-term trend analysis and forecast. You really don't want to be just you know, like all these bears just downright calling for the crash, 1929, 2000, dot-com bubble, and all these things. Just keep in mind, these guys been saying the same thing over 10 years now and missing out everything. And so you don't want to get there. You don't want to do that. You don't want to follow these guys. So understanding the long-term trend and the implication of it is going to be important. I don't analyze anything else until I fully understand the trajectory of where the S&P 500 goes, right? First thing I look at as soon as I come into the market every morning is the S&P 500. And then I'll go through different sectors, different indices such as NASDAQ, semis, Dow, and the Russell, but everything starts with S&P and it ends with S&P. And because S&P is really that golden index. So if you understand where the S&P is going, you can really able to understand the overall sentiment. So you do not have to start calling the major tops every single day and start panicking every time we see 1 to 2% corrections in the market. So currently the mini membership is $790 a year for Black Friday offer, for the recurring subscription there for mini members. For investor and premier, this is full membership. They're usually, as you can see, you get $1,000 discount for these investor and premier. They're very similar. So only difference is for only difference for these is really the investor membership does not receive options trades or anything to do with the Bitcoin ETFs, crypto mining stocks, or something, you know, like exotics like Forex or special ETFs. These are gonna be a reserve for premium because they're much more wild. Obviously, investor membership is really for investors who wanna buy stocks, index funds. I got some gold, silver ETFs. Gold and silver has been doing well, but I've been buying those all throughout the last couple years. I'm finally seeing these guys really making a run. Leverage ETFs, right? Double shares and triple shares on indices, S&P 500, triple shares and things like that. And so, you know, and buying the, you know, undervalued stocks for long-term holdings and buying the, you know what I'm saying, corrections. And also, obviously, you're going to get the holdings review. So I'm going to go through all of my holdings and you have to see where I enter, how long I've been holding, how much I bought. And so many people are so, you know, every single day I get this question every day on YouTube and on Twitter. Every time I share my oscillator, they're like, oh, what oscillator is that? What is the settings on that? With the full membership, you get a full list of all of my oscillators that I use. I mean, I feature like that one oscillator you see a lot on social media, but I use like 10 different oscillators, and you get a full list of the oscillators and moving averages, its settings and its modifications, just full list of it and the names of it all. 100 hours of video lesson library if you want to learn everything about everything that I know about how to navigate and trade this market. And another thing is that, you know, obviously in every single trade, and I have a full performance transparency, and I've been tracking my trades since 2014, so it's been over a decade. I have a track record over a decade of track record that you can have to go back and see. Every single trade has been plugged into the spreadsheet, and you would have to see, you know, every single year from my brokerage, you know, snapshots here. As you can see, this is the year to date this year. This is from my E-Trade brokerage platform that I snapshotted here, and so I have this screen since 2014, and every single trade I've made since 2014. When I enter, how much I bought, when did I exit, what was the profit, what was the loss. All of that is available, and every single trade when I exit, it will be shown. Was it a winner? Was it a loss? How much did you lose? How much did I win? All of that is recorded and displayed, and it's gonna be in the update or alert that you receive for as a subscriber. So you get to see, you know, so it's a full transparency. This is from my E-Trade account again. It's a 7-figure account, so this isn't just some chump change or some side little account that I manage. This is a huge account. This is my main account where I actively manage my portfolio here. And so and this is performance for realized returns. Of course, these snapshots that you see here from brokerage, these are based on account value. So that's gonna put my entire account and see how they, how they've been performing in this, of course, including unrealized and realized gains. But here you can able to see more of a, this is excluding the unrealized, but only including the realized returns, I think you get a little bit better view, more cleaner version here. You know, it's because it's not a real loss until you close it out. It's not a real gain until you close it out, because you never know, right? Market goes up and down. So I think this is a good view here. You can go all the way back to 2014 if to see how I've been trading and how those trades worked out. So that full transparency is very, very important. And every single trade you will see it. And you have to understand though, none of the trades that I share or with my subscribers, they're not just ideas. They're not just ideas. They're not just setups. I know there are a lot of subscriptions out there that they're going to provide ideas, active ideas or actionable ideas. I think they might call that actionable ideas or actionable setup. These are not ideas or stuff. I will not be talking about certain stocks or options or whatever I'm talking about for my subscribers if I'm not already in it or if I'm not thinking about getting into it. All the trade updates, they are going to be based upon my real trades that plays in my real account. So for that, currently I'm running a promo here for Black Friday for Investor and Premier, and you can able to take advantage of that. $1,000 off, $3,000 a year for Investor, $299 and $499 for the Premier. And if you have any questions more on this, feel free to use right down here. You can have to ask me a question through this, or you can have to send me a text here, and I try my best to answer any questions you might have. What I would recommend is building your portfolio and balancing it correctly, and then you want to grow your portfolio over time, and you want that compounding effect working for you. Obviously, I've had a phenomenal last couple years, because the reason is, as you guys know, that I've been bullish during 2022. 2022, you guys remember the bear market we were in. Not only that, you guys also remember how I was also bullish during 2020 COVID lows. So I was accumulating very, very heavily during 2020 COVID, and during COVID lows, which was Spider 220. I still remember like it was yesterday. And remember 2022 October lows, which was Spider at 340. So I was accumulating quite heavily in these two major opportunities, while everybody else out there, they're just freaking out, preparing for 1929 Great Depression. And so that's why you're seeing such a really great returns last couple of years, because of those lows. Because I was very much bullish on those, and this was on top of what I was already holding, right? And so the compounding effect really kicked in, and that's why I was able to generate gains like these, not because I found some kind of found some stock that is very unknown, and I bought a bunch of stuff, and then that thing just went 300. Nothing like that. You guys know what I share on YouTube and on Twitter. Like, you don't hear me talk about some penny stocks like that. I trade these stocks that all you guys trade: Google, Amazon, and Netflix, Nvidia, triple shares on S&P, Nasdaq, semiconductor, AMD, right? Netflix, Facebook. These are the things I trade with, and then also I get into options, Spider Qs, and some other options, like maybe I was in CMG options. I'm still in CMG options and Dell options. Or Nvidia options, will recently closed them out. So I'll trade these, but I think the reason why, as you can see, if you look at this chart right here, this is 2-year chart. Again, this is from my brokerage account. I snapshotted. you see where that tipping point occur. So it's because I bought the October 2022, right? And so, and this was also on top of what I was already making since 2020 lows, because I also bought 2020 lows. And I was accumulating so much in 2022 lows and 2023 lows. This is where, you know, it's gonna look as though your account isn't going anywhere. That's very deceptive, right? Because it feels like, okay, well, I mean, though I was beating the S&P the entire time, really. I mean, I started beating the S&P really late part of November 2020. This is me here, purple. I was beating the S&P pretty much the entire time, but it really didn't kick in till here, October of 2023. Right, look at the separation that occurred from the rest of the market and my trading account. Is because that compounding effect really kicked in. And also, you guys remember that one video from November 2023, October, I put out a video, I think something like we need to talk or something, or I'll explain everything. I was also accumulating quite heavily on that low. And so throughout this, with all these major lows, me accumulating, and then when market pretty much went vertical during 2024 this year, that's when compounding effect really kicked in. I really didn't have to trade a lot. You know what I mean? Not every day, because I'm not a day trader. I'm a position trader and a long-term investor. So I see lows, I'll buy it, and which it helps for me to do that when I have, and this also is fully modified to accommodate my trading style, right? So these are the lows that I really want to buy, those call options, man, those triple shares, right? These are the lows that I'm because I'm not gonna be buying these little tiny pullbacks. I'm not gonna be buying these tiny pullbacks every single day. No, I need to see minimum my daily oscillator, right? Fully resetting, full reset, and these green circles there, that's the vicinity that I'll be start accumulating, and I'll be riding majority of these moves. And I'll manage my portfolio based upon what I see on the daily chart and weekly chart and things like that. And so this also is fully modified to accommodate the way I trade. And these are all the stuff that I'm going to teach you in the full membership.